Thank you, Gabrielle. I managed to get the slideshow up just in the nick of time. I'm the economist from the insurance industry. Just before you get to lunch, it's going to be an easy sell. I'm sure we'll all have a good time. So please bear with me while I go through some insurance issues and some economic issues. I'll go through the benefits of reinsurance, a little bit on the insurance side, since this is a little obscure of a industry to many people. The macroeconomic drivers for the region, and the insurance markets of the GCC and its outlook, the outlook for the insurance markets. This covers reinsurance, but I'll explain a little bit about insurance because apparently some people don't know too well about that. But insurance, it's a benefit only if you have a large pool. So think of lots and lots of drivers, a big, large pool of motor insurance. And the larger the pool, the more predictable you can get with respect to the number of accidents each year. And then you can price it out very finely. So 1% of the accidents, then you have the rate. If every year there's 1% of the cars get in an accident, then you have a price that you can calculate the insurance off of. If it's 2%, it's twice as much. So people don't like this, but if it's very risky, it, of course, goes up in price. And in many countries, they're starting to put little gadgets in cars. And the better you drive, the safer you drive, your price of insurance goes down. So it's a risk-based kind of product. And you need to have a wide variety of risks in your large insurance company to be able to have a really good business. What reinsurers do is you've got an insurance company, and they need to offload some of their risk and manage their capital. They send it to the reinsurer with some premiums. We then, of course, as an industry, we invest in. We take the premium flow. It doesn't come out. It doesn't get paid out immediately. So we invested in projects and different types of assets. They can be Takaful type of investments. They can be, of course, conventional assets, bonds, equity, property. So I think I covered that on putting a price on risk. So that's it. The big thing that reinsurers do is, of course, often absorb a lot of the catastrophic risk. So if you hear about a big catastrophe in the world, earthquake in New Zealand or Japan, or the storm Sandy, you've had cyclones in Oman, these kinds of things. Reinsurers are very prominent in paying out for those. We've had a lot of catastrophes in the last 25 years or so. They seem to have gone up a lot. Our sort of inside joke in the industry is every year we have a 100-year event. So something drastic is going on somewhere in the world each year. Now you see the big spike for Katrina, Rita, and Wilma in catastrophes. These are in billions of dollars of insured losses. Typically in a very large catastrophe, of course, the insurance companies locally pay for the homes that are destroyed, the cars that are destroyed, but the reinsurers come in and they pay about half of a very large catastrophe. A little less for Sandy, it was about 30%. The macroeconomic outlook, this shows you the GCC in blue, growth. It's Middle East is the rest of it. Very strong growth since 2000. Very rapid economic activity. And with strong economic activity, normally you help in some sense we call it financing growth with insurance. Of course, there's financing through the banking sector or the financial sector, but banks don't like to lend to a construction company if they don't have insurance, because if the building falls down, it's kind of difficult to get income off of it. So that implies that they want insurance when they lend to a company that's doing construction. The big economy, of course, Saudi Arabia, and followed by UAE, and the other countries smaller. What are the growth drivers in the region? I think we know these pretty well. I won't dwell on it. High oil prices, very big on growth. It gives you the surplus that we heard about earlier. The surplus is reinvested in infrastructure, big projects requiring insurance and financing, as well as diversification out of hydrocarbon area into the non-hydrocarbon area. Challenges coming from political issues and, of course, potential slowdown in the global economy. This shows you some growth potential for the region. Look at India. This is on the left-hand side. India has 4% of its premiums from insurance industry relative to GDP. We call this penetration. But look at Bahrain. It's only 2%. UAE only 2%. Saudi Arabia, Qatar down around the 1% area. So plenty of potential for growth to get to more insurance, fueling growth also. On the lower axis, of course, is premium growth. So it's not that they're not growing rapidly in insurance space, Bahrain, UAE, Qatar, Saudi Arabia, a little lower in Oman, as you can see, and Kuwait, but it's still quite strong, over 6%, 8% in Oman. But the penetration is low, so plenty of potential for more insurance. The low insurance penetration is due to insurance awareness, a lack of it, a lack of knowledge of the use of it, cultural constraints, and some uneven distribution of income, key issues. This shows you the trend in premium growth in the Middle East and GCCs. Big area for growth is non-life. Non-life is just much, much larger in this region. And life is less popular due to cultural factors primarily. You see, instead of Saudi Arabia having the largest premium volume, it's instead in the GCC countries, it's the UAE with the smaller economy because they have the higher penetration rate. What are the factors driving growth in the area? There's low penetration rates. We expect that to go up. It typically rises rapidly in emerging markets in economies like the GCC. You have favorable demographics. That means population growth, growing wealth, of course, lots of large infrastructure projects. And you have frequently compulsory insurance, health insurance, motor insurance. Takaful is growing very rapidly. This is a form of insurance I'll cover a little bit later. Bank assurance is the way of distribution channel of selling insurance products through banks. It usually is a life insurance policy, term life based on a death benefit for a family that's lost a primary breadwinner, or a savings product. Can be Takaful or a conventional savings product. This shows you the opportunities in the huge infrastructure area. Pipeline is very large over the next decade or so, or this is what it's been in the past, 0.7 trillion, nearly a trillion, and going forward 130 billion per annum projects. Swiss Re, of course, participates in these. There's a wide variety of construction, marine, engineering, aviation, marine, insurance classes or products that work very well in the supporting construction of infrastructure. In the GCC, Swiss Re, of course, is participating in many of these large projects like Princess Noura University in Saudi Arabia, the Saudi Railway, the Doha Metro, and the Burj Khalifa Tower, the largest tower in the world. Big things, big companies are involved, and you probably haven't heard of Swiss Reinsurance, but it's the second largest reinsurer in the world. Islamic insurance, Takaful, key facets of Takaful, if you're unfamiliar with it, are a cooperative type of insurance. You have to keep the policy holders' funds separate from the shareholders' funds. You also have to be compliant on your investment side. Takaful investments, that means no interest bearing, no breweries, these kinds of things. And the final factor that's important is a board of supervisors of scholars, Sharia compliant scholars. What's happening with the Takaful in the area? Growing very rapidly, but from a very small base, 1.5 billion total contributions. Saudi Arabia and UAE are the largest. In the area, Sudan has quite a large Takaful. The leader, perhaps globally, is Malaysia with very good supervision and regulatory authority. That's where we have our re-Takaful arm. So when we reinsure Takaful in this region, we send it through our Malaysia arm, re-Takaful. We have family Takaful, of course, growing rapidly. Those are family products. And personal lines are definitely unexploited in the area. The challenges, of course, limited consumer awareness. It needs to target new clients and markets with distinct value proposition. They're not necessarily harmonized on operating models, regulatory frameworks. They vary quite a bit between countries. There's also very limited opportunities. We're looking to Credit Suisse and other companies to come up with some of these opportunities of investment products, bonds, etc., that can be invested by these companies and entities. And a shortage of experienced staff is always the problem. A big issue in the region, Bahrain and Saudi Arabia doing quite well on regulatory, Qatar and UAE coming up, but a little weaker in Kuwait and Oman. But you need a risk-based model. So capital held sufficient, so if the claims come flowing in, the policyholders will be made whole. And that's the big issue with the regulatory thing. Of course, then you bring in enterprise risk management and better underwriting techniques as part of that also. Just to go to the concluding remarks, long-term growth looking very good in the GCC area. So that's very positive, and that usually comes along with strong insurance growth. So we're expecting particularly non-life insurance to grow rapidly in premium volume. Life has a long way to go because it's quite small in that area. The compulsory insurance lives will do well. Of course, health and motor has been the key ones. But you often get countries like Turkey that have compulsory earthquake insurance. There have been earthquakes in the region, in Iran, but only shaking in Kuwait, not an earthquake in the GCC. So these are compulsory insurance, often very beneficial because it spreads the pool, makes it larger, and makes it easier to price. So intense competition at this time, lots of insurance companies in the region, many of them rated, but you also challenged, of course, with the pegs to the U.S. dollar. You have very low interest rates at this time, so it's difficult to make a lot of money on your investment side. Insurance companies make money through premiums and pricing and also through investment. Finally, reinsurance can further support the development of insurance in the area, particularly what we provide at this time for a region like the GCC, the Gulf Cooperative Council, is expertise in underwriting, expertise in risk management, training, and all these kinds of things that reinsurers understand very well, and the less developed insurance companies need a little bit of help and support at. Thank you very much.